Welcome back. It's Chris Gosselin from Australian Fund Writers, and today we're talking to Dean Fergie from Cyan Investment Managers and the Cyan CG3 Fund. Dean, welcome.
Thanks, Chris. Thanks for having me back.
It's been a while and there's been a lot happening. Obviously, we're in reporting season. We've got a war going on in Europe. We can talk about that later. We've got floods that's disrupting things within the UK, within the northern areas of Australia. What else can go wrong?
Yeah, look, I mean, it's been an incredibly tricky time. It just seems as soon as you get over one hump or disaster, another one strikes. But that's sort of the nature of the market. So I think, what we saw for certainly towards the tail end of COVID was some really, really extended valuations across the board. So if you want to put a positive spin on all this drama recently, certainly the inflation fears and the geopolitical issues in Europe, the silver lining is that stock prices have had a pretty serious correction, and certainly in some of the sectors, and certainly ones we specialise in our fund, the sort of smaller tech stocks, it is providing an opportunity at the moment to buy into stocks that, in some cases, 40, 50, 70% below their highs. Now, arguably those highs were probably too high at the end of COVID, but I think that's where you look at some opportunity, is that the underlying businesses, that's probably a little bit of value creeping in if you're prepared to wear the broader global uncertainty as we're seeing right now.
You see this as a positive thing?
I think so. What we've seen, over the last decade or two, whenever there's a serious kind of external event that drives prices across the board lower, especially with low interest rates. I know people are talking about interest rates going up, but they're going up from a tiny level to a very small level. I think you'll see a wave of buying come into these stocks and prices push higher, and perhaps quite viciously in the short term. That's exactly what we saw at COVID. It was a major shock to the system. Share prices crashed substantially, and then almost within the space of 2 weeks they'd bounced back pretty significantly. So if history is likely to repeat itself, I think that's what we may see is, the old saying, it's always darkest before the dawn. When there's a lot of uncertainty out there, it's maybe at least time to start dipping your toe in the water rather than trying to draw all your assets out and put them in cash.
One of the areas you've specialised in and done very well out of over the last few years has been IPOs and new offers coming to the market. Have you seen a change in that market over the last 2 or 3 months?
Yeah, significantly. Look, I think what happened is that a lot of IPOs towards the tail end of 2021, the money, the valuations they were asking for were pretty inflated. It was kind of getting the tail end of the demand as such, and some of them performed like absolutely terribly, atrociously. You've seen like things like Step One, which had a great debut, has more than halved since its highs. Things like Before Pay are down kind of 60, 70%. So that kind of, for the moment, has really dried up, both in terms of the quality but also in value. And I expect that will be the case at the moment, because I can't see, with all this uncertainty in the markets in a little bit of a flux at the moment, that companies are going to be coming to the market going, we're a brand new company, would you like to throw some money at us for an expansion? I don't see that happening. So for the moment, that market's much, much quieter than it was in 2021.
So if the froth is coming off the top of the market, that's probably good, isn't it?
Look, I think that's probably what we're seeing. I mean, a lot of investors would go, froth's great. I've just bought a whole bunch of stocks I don't really know much about, and they've all gone up 30% in a couple of months. It's kind of easy, but it's when you go through these periods of real uncertainty that people have to start going back to the numbers, going back to the market capitalisation, going back to the revenues and the profitability and the dividends, and saying what makes financial sense. Not what's a theme, what sounds good, what's an exciting story. What makes pure financial sense, and that's where I think investors that are more professional about what they're doing can potentially add value. Whereas for us last year it was hard because stocks that seemed to make no sense were trading at sometimes billion-dollar valuations. You look at things like BrainChip that had no revenue whatsoever, was amazing performer. So that makes it harder. But I think what we're seeing with such uncertainty that people will come back to the numbers, and I think it will make our job a little bit more, not easier, but just it will make it a lot more relevant.
Do you see any implications from the situation in Europe at the current time?
Yeah, look, I'm certainly not an expert in European geopolitical activity. I think for me, the threat of that war going nuclear is a real worry. But again, in Australia, we're so far removed from it. How that will impact our day-to-day living, the day-to-day economics, I think are very, very mild. We don't typically play in any resources companies, and that's where you're going to see really big swings. And we've seen it already in terms of the raw commodities, the oil and the gold and the like. And I think how things play out in Europe will significantly affect how those assets perform, possibly positive and possibly negative. But in terms of our portfolio, we've got domestic businesses that are operating in a local economy, maybe in some of the more developed countries. I don't see, other than a sentiment basis, that kind of uncertainty in Europe affecting the underlying fundamentals.
The real impact of things that are happening at the moment in Australia, from a positive sense, tourism should be coming back, which is obviously good, and you had some tourism stocks in your portfolio in the past, and inflation.
Yeah, look, I think that's right. It's interesting people talk about inflation as being a real negative, but I also see inflation domestically as being a sign that the economy is doing really well. There's a lot of demand driving up prices, so that in a way should be a good thing, other than the fact that the discount rate that you plug into your financial models makes valuations go down slightly in a rising interest rate environment. So I don't necessarily think as being an overly bad thing. It is a sign that things are strong, and that can benefit companies in terms of their top line revenues.
Dean, to wrap up, the impression I get is that you are positive about things going forward. You see opportunity because prices have come back, and you don't see, while that there are various headwinds and issues and risks around, you don't see a reason to take risk off the table.
Yeah, look, I think that's probably right, Chris. The thing is that there's never a great time to buy stocks. And everyone goes, oh, look, everything's fine, and now's a really great time to buy. They think, oh, there's a lot of uncertainty, there's potential war, there's inflation, it's not a good time to buy, prices have been crashing. I think you've got to look at it from a counterintuitive kind of perspective. This is the opportunity where you can pick up things at in some stage very, very reasonable prices compared to where they have been recently. May they get back there in the short term quickly? Possibly not, but I think it's a mistake to, when everyone's nervous, to go, I'm just going to take all my assets off the table and just park them in cash for a few months. If you do that in a couple of months, things can change significantly, and there can be a big rebounder. And like we saw at COVID, 2 years ago, those people that got really nervous in March 2020, took a lot of money off the table, missed one of the greatest rallies we've seen in recent years. So that's kind of my view at the moment. Yeah, in the short term, I remain pretty positive.
Great to speak to you as always, Dean. Thank you, and we look forward to speaking to you in the next few months and see how that is playing out.
Fantastic. Thanks, Chris.